Hi there, this is Maricruz with Signature Real Estate Group. I am here this morning with Jerry Glover from Citywide Home Loans. He is a mortgage lender and he's going to be addressing some questions that people have been asking me in the last few weeks. So I figured why not have a professional tell you all the information you need to know when you are thinking about purchasing a home. Hi Jerry.
Hi, well thank you for the opportunity, Maricruz. My name is Jerry Glover. I work for Citywide Home Loans. I've been in the industry for almost 20 years, starting in South Florida, California, now in Las Vegas. Whatever questions you guys have, please direct them to Maricruz and we'll be glad to answer them through these videos. What's the first question?
So the one thing that I get asked a lot, I'm sure you do too, is how are interest rates right now and what do they look like?
Great question. Right now, interest rates are at all-time lows as they've been the last 5 to 6 years. We're down to low fours for FHA, even 3.99. For conventional financing, we're in the mid to high fours. And those are all fixed rates. Fixed rates.
Mm-hmm. The other thing I want to talk to you about today, Jerry, is I get a lot of questions on what do I have to do to qualify? If I think I'm ready or if I don't know if I'm ready. I would like you to walk us through the process on what a lender looks at and what things that people might think that may affect them. For example, like medical collections and stuff like that, which is a lot of things that people don't bring up because they think that it's going to affect them in the long run. So walk us through the process of what somebody needs to start looking at or preparing so they can be ready.
So what I like to emphasize are the twos, the three twos, which are 2 years of W-2s or tax returns, what we look at, 2 months of bank statements, and the last 2 or 30 days of pay stubs. So those are the first 3 things that we analyze. With regards to that, you always have to have 2 years of work history, okay? So with that 2 years of work history, we also verify where you worked, how much you've earned, and depending on how you're paid, if it's a salary or commission, we also get further information.
But that doesn't mean you have to be at a job for 2 consecutive years, correct?
Great question. So no, you don't. So with regards to that, typically you want to be within the same line of work, but that doesn't have to be the case. So you can actually have only a 2-year total work history, which is what we have to verify. But you could have just started a job, and as long as you can show us an employment letter or a contract and provide us 1 pay stub and a full verification of employment, you can qualify at that time.
That's awesome.
Mm-hmm.
So let me ask you one thing, because I know some people don't know the answer to this, and there is a misconception about it. A lot of people think that you have to have 20% down to purchase a home, and also you have to have amazing credit. Tell me a little bit about that.
So there are different thresholds with credit scores to qualify. For FHA financing or government financing, you can actually qualify with a 580 credit score with 3.5% down. We can go to even 560 with a 10% down payment, okay? For conventional financing, the threshold or the minimum is 620 to do 3% down for a first-time home buyer or for your primary residence. So no, you don't have to have 20% down. We can go to 580 for only a 3.5% down payment.
That's awesome. So there's a lot of people that wait because they don't have a 700 or 800 credit score, when in reality, you may be able to qualify now and you don't know it. So it's a great idea to either get a hold of me, I'll connect you with Jerry, and he will guide you through the process. If there are maybe some things that you're not 100% sure of, it's better to talk to you, and then you can just let them know what they have to work on.
Absolutely.
Right? You can do that?
Absolutely. And then we can touch on the collections situation as well. Lenders do not frown upon medical collections, okay? So if you do have medical collections, there's something that don't have to be paid. Anything that's a non-mortgage collection does not have to be paid unless the maximum amount is $2,000, okay? So what we'll do is we determine, it's kind of a subjective thing with an underwriter. An underwriter is going to determine whether or not you have enough reserves to pay it, or if you've demonstrated a payment plan if it's a huge collection, but don't ever be discouraged to look to qualify if you do have any collections.
That's awesome. That's awesome information. So I want to shift a little bit and ask you about a seller. For example, a person that has that property already and has bought a home but wants to sell it and buy a new one.
Okay.
What kind of things do they have to look at? Because I know for some of them they may have equity in their home, they may not. So would you recommend for them to come and speak to a lender first as opposed to selling that house to see if that purchase is even possible, or how much do they qualify for, or what would you advise a person who has a home but they want to buy another one?
That's a great question. So as Maricruz mentioned, it's very important for you if you're looking to either move up or downsize from selling a home that you currently own and purchasing another one. You should always be advised by a lender to see exactly where you stand with qualifying with the next purchase. There's a possibility that you could qualify without having to sell that home currently, or if you need those funds for the next purchase as a down payment, absolutely we can run through scenarios of qualifying. So most sellers, as you know, become nervous because they don't know, they don't want to be homeless or what have you.
Right.
But in a lot of times, if you have funds in another retirement account or what have you, you may be able to retain that home or go look for a home and not have to immediately sell it and purchase another one while you still retain that. So there are a number of ways of doing it, but again, you should always look at speaking to a lender prior to, if you're not going to pay cash.
This is a lot of good information, everyone. So we're going to make this a really quick, short video, but if you have any additional questions, you can always reach out to me. I will connect you with Jerry and share his information should you have any kind of questions. There's some things that I feel better that you ask him personally, just because he is very knowledgeable. They have a lot of different programs for different types of scenarios or people that could take advantage of different things. So it's always a good idea to stay connected with the people who have the information, as opposed to just the things that you hear from word to word or word by mouth or online. Sometimes it's not 100% accurate. So there is one last thing that I did want to ask you about. Because I have been told, even by personal friends, and it's something that I know that a lot of people don't know. So obviously there is a lot of people who want to purchase a house, but they don't have the down payment, or they don't have any money saved up, because it's hard to save up, especially if you have a family or other things, day to day. A lot of people don't know that you can tap into your 401k to make a home purchase. Can you tell us a little bit about that, and what would you recommend?
Sure. So there are a number of different sources to help with down payment. The most popular down payment assistance program in the Valley is through Nevada Housing, which is called Home is Possible. I think it's the most aggressive, the most lenient with regards to guidelines, and we can get into that once we do a one-on-one consultation. So that's one opportunity. You do have to have a minimum credit score of 640 to get the 3% or what have you to help with the down payment. Secondly, if you don't have, or you don't qualify for that, you can always have a gift or receive a gift from a family member. When I say family member, it could be a blood, mother, father, brother, sister, or cousin, or someone you have a very close relationship for which we can demonstrate a close or long-standing relationship. So again, down payment assistance through state programs, a gift from a family member, and then thirdly, most people don't realize, guess what? That 401k or that retirement account, or maybe a life insurance policy that has a cash value, can be used as a source of down payment. What typically these money managers require is proof that you're purchasing a home, which is a contract. Secondly, a loan application, and within a day or 2 days, you can have that money. It's typically either sent to you by check via FedEx, or it's wired directly to your account. It's not difficult at all. In fact, again, it's a government guideline that allows for you to use those funds in a emergency or a purchase for the primary residence.
Yeah, and they advise you not to use, that money until retirement, but there are options out there. So if you are even thinking about it or have thought about purchasing or downsizing or upgrading, there are options for every situation. So let us know. Hopefully this video was a little informative and can guide you through the process that you're going to be getting yourself into. And we're here to help. We're here to answer any questions. We'll be doing a lot more videos, so if you want to send me a message or comment on what kind of information you're looking for, we'll put a video together for you so that way you can share it, you can have it handy for whenever you need it. So thank you so much for watching. This is Maricruz with Signature Real Estate and Jerry Glover with Citywide, and we'll see you guys next time. Bye!